please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. You're watching Power Breakfast on CNBC TV18. Well, nervous times for our equity markets. You have crude oil prices that are sitting above $81 per barrel. And the SGX Nifty, when we started off the show, was telling us maybe we'll have some green to kickstart trade, 15 to 20 points. Looking very, very nervous. That as well now is giving us a more realistic picture. Maybe a flattish start is what we can have just to kickstart trade with crude prices holding comfortably above $81 per barrel. Well, I think that's definitely taken note of that big factor. But moving on then, the Information Technology Ministry has made it clear that they are not in a position to ask the Reserve Bank of India to extend the deadline for payment companies to comply with the data localization norms. Remember, the deadline ends on October 15th. Ashwin Kumar joins in with more details.
Well, to begin with, as has been correctly pointed out, the deadline for locating data of Indian users by payment companies on Indian servers is October 15th. What that effectively means is that it's just a couple of weeks away. With that in mind, that has been a pressure point as far as various payment companies are concerned. When I say payment companies, I mean the likes of MasterCard, Visa, WhatsApp Pay, Google Pay. They all have been eyeing the market here locally. This, of course, has been a stumbling block for them. And with the deadline only a few days away, there is a great amount of apprehension as to what happens if they're not able to meet with that deadline. Now, in response to concerns that have been raised by payment companies, highly placed sources within MeitY tell us is that MeitY cannot be a part of this decision-making process, that this has been mandated. The October 15th deadline has been mandated by the RBI, that the onus then falls on the RBI to come through with that decision on whether or not the RBI wants to extend that deadline, that submissions, if any, from the payment companies should in fact be forwarded to the RBI, that MeitY has no role to play as far as payment companies and their data localization norms are concerned. So that is something where we see the MeitY shrugging its shoulders and passing on the buck as far as data localization is concerned to the RBI. So that concern still remains. All eyes now on the RBI, whether or not it chooses to extend that October 15 deadline for data localization. Back to you.
Okay, all right, Ashwin. Thanks very much for that. But on to the real estate corner now. BlackstoneBacked Embassy Office Parks has filed its draft offer documents for the listing of the Real Estate Investment Trust. This would be India's first and Asia's biggest office listing. Kevin Lee joins in now.
Well, it's been a long road to India's first REIT listing. Remember, SEBI came out with the guidelines on REIT listings as early as 2014, so it's been 4 years. Blackstone Embassy now hoping to become the first company to list a REIT in India. This is a 5,200 crore rupee offer, but there is the option to upsize that by 25%, so that's up to 6,800 crore rupees. Blackstone expects the REIT to be listed by the end of this fiscal year. That's by March 2019. The draft offer document was filed with SEBI today. Now, this REIT is going to be Asia's largest office REIT by size. It's spread over 33 million square feet. Out of this, 24 million square feet is completed assets, whereas 9 million square feet is still under development. Let's talk about the portfolio a little bit. There are 11 assets in this REIT portfolio spread across Mumbai, Bengaluru, Noida and Pune. 6 of these assets are owned 100% by Blackstone. The remaining 5 are joint ventures between Embassy, Blackstone and some smaller investors as well. The Express Towers in Mumbai's Nariman Point are part of this. Also important to note, this REIT will have the right of first offer when it comes to future Embassy office projects. Embassy is currently developing about 50 million square feet of office projects. As and when these are completed, this REIT will have the option to add those in its portfolio and make it a bigger REIT. So finally, India set to get its first REIT, hopefully by March 2019.
All right, 3 months after the deal with Flipkart, US retail giant Walmart is now working on an integration plan. It's in the process of drawing up a blueprint to boost synergies so that the company can share best practices on technology, merchandising, as well as logistics. CNBC TV18's Priya Sheth caught up with Walmart India President and CEO Krish Iyer on the sidelines of the launch of the company's 22nd cash and carry store in Ludhiana.
I think nothing has changed for us or for Flipkart for that matter. I think Flipkart continues to focus on its business and in terms of acquiring more members and making the more customers and making the existing customers very happy. So on our part, we continue to focus on rolling out our new stores as we had planned. So things are progressing extremely well, and we continue to probably now we share our best practices with each other much more freely.
You know, talking about sharing best practices and building synergies between the two companies, if you could run us through what kind of synergies would you perhaps be looking at? Would have some decisions been made on the sourcing front, on the vendors front? Where is the synergy going to really play out?
In a way, in the longer term, there are multiple synergies. We can learn a lot in Walmart India from Flipkart on technology. They have fabulous team of engineers. They have a great platform. They are very good in analytics as well. In terms of merchandising, we can share a lot of best practices with them, and they can learn from us. So we'll continue to do that. One has to see in the long term on the logistics and warehousing front, what would be the right way to go. I think in the short term, I don't see any changes to be made in our strategies.
Well, India and America may be closing in on a trade package soon. Officials from the USTR are in the national capital to discuss and iron out differences between the two nations. This comes close on the heels of India deferring retaliatory tariffs against 29 American products worth around $235 million till the first week of November. Rituparna Bhuyan filed this report.
Well, this is a second meeting between Indian and US trade diplomats, and the sense that we got from some of these people who will be sitting across the table and discussing a trade package is that, you know, that there are points on which both countries can agree and take forward the trade package. But remember that, you know, US had imposed tariffs on steel and aluminium, and India has demanded that India should get an exemption, and hence a retaliatory tariff notification with implementation from 2nd of November that was released. So obviously that will be one point of discussion between both sides. The second point of discussion, according to sources, would be the regulatory environment related to, you know, medical devices. US has seen the, you know, discussion paper that Niti Aayog had recently released, but they are not entirely convinced that whatever Niti Aayog has proposed takes care of their concerns. Hence, this will be one more point of discussion between the trade diplomats. Last but not the least, India is also looking at extension of GSP benefits by United States. So again, this will be the third point of discussion. Net-net, they're trying to work out a trade package, and the feeling is that, you know, $20 billion or $21 billion trade deficit that US has with India may not be, you know, such a big deal as far as, you know, engaging in a full-blown trade war. Hence, the focus is on having, you know, a common package which benefits both the countries, and it remains to be seen if in this round of talks both the countries are able to sort out their differences.
Well, the Chief Election Commissioner has hit out at the opposition parties and those questioning the electronic voting machines. Speaking exclusively to CNBC TV18, Mr. O.P. Rawat called it a convenient political ploy and warned that a return to paper ballot will bring back issues like booth capturing.
It is our duty, our responsibility to satisfy all our stakeholders. Even if slightest doubt they have, we will try and do everything to put that doubt to rest.
But otherwise, would you agree, and this is probably a statement that you had made earlier as well, that when the competition is stiff, these kind of allegations come up. Would you stand by that statement, sir?
That is what our experience has been. Like political leaders saying that it is EVM which will defeat us. And when they win the election, they come up with a different explanation. They say that we would have got more vote if EVM were not there. That is showing that it's not EVM's fault. It is something they doubt among themselves, that they are going to lose and EVM is to be blamed.
Convenient political ploy.
Yeah.
Yeah, would you say that?
It appears that way.
It appears to be a convenient political ploy. You know, sir, I'd like to talk to you about electoral bonds. I think when this amendment was being debated, the Election Commission had given its views, saying that it's a retrograde step. Do you also feel worried that somehow this is an opaque process, blocks transparency in political funding?
Actually, not debated when this finance bill was passed and electoral bonds were introduced through this finance bill. At that time, Commission expressed all its concerns comprehensively to the government, that these are the concerns which need to be addressed before going in for rolling these bonds. At that point of time, government said that it is too premature because even the scheme is not finalized yet. It is only the legal amendment which has been made. So Commission felt, okay, then we will wait and we will sort of revisit the whole issue after we have a scheme, it has been implemented, and contribution reports from political parties have come to the Commission, so that we can take a comprehensive view as to whether our concerns, which were flagged after the finance bill was passed in 17, are addressed comprehensively, partially, or not at all.
So you're reviewing them right now?
So we will be reviewing as soon as this 30th September is over, because this is the deadline for contributions report.
Well, you know, Ektan, yesterday's trading session, we did see that the DIs, they are pumping big time money. You know, close to around 1,500 crores is what they pumped in. And the FI selling was only 500 crores. And yet we ended down close to around 150 points odd. So that's telling you that the DIs, they're doing their bit. And in spite of that, we are falling. So it seems there's more panic in the market actually, rather than institutional selling that we have been seeing. In terms of you know, the futures futures market, they bought close to around 500 crores approximately. There have been some contra long calls as well that they have been taking, and that continues. Even in yesterday's trading session in a falling market, you had the premium that was expanding, and overall, if you look at it, remember the short positions were nearly around 60%. Now that's come down to around 51% approximately. At the start of this series, remember the long positions were more than 60%. Then that came down drastically. As we stand pretty much even Stevens, both the long as well as the short positions. The India VIX has been on a tear. The market's been falling. So normally we see that sort of a move. In the last 1 month, the VIX has moved nearly around 45% from the lows that we saw just around a month or so ago. There was big option buying actually. The number of puts bought were tremendous in yesterday's trading session. So there's a good amount of protection on the downside. But I think what's going to really indicate the kind of fear that we're seeing in the markets is the amount of writing that we've seen. The calls written were nearly around 33,000 contracts yesterday, while the puts written were only around 3,500 contracts. So close to around 10 calls were written for every one put. So that's telling you that if we get up and going, then we're likely to see selling pressure. Take a look at the calls that they were writing. 11,100 call, 11,000 call, between them adding close to around 23 lakh shares. Remember, we are in expiry week, so it's going to get very, very volatile. But one indicator is the PCR. That's moved to the lower end of the range. One would think that, you know, some of the selling pressure should base out at around that 1 odd mark. So keep that in mind. It's at around 1.05 approximately. Maximum open interest as well is at around the 11,000 put. So the bulls will be hoping they can defend at least the recent low. What are the levels you're looking at? A bounce to around 11,100. Well, that's going to re-invite some selling pressure. The bulls, Ekta, they'll be hoping that they can put in a fight and defend the recent low. That's around 10,866 odd mark. And technical levels as well up for you on the screen. 100 DMA, just around 30 points away from current levels, so keep an eye out on that mark. But the real support should be at around the 200 DMA, because the bulls will say, if we don't protect that mark, then it's going to be rather ugly.